Welcome to the Nexia podcast, Nexia Transfer Pricing Talk. Today I'm very happy that we could introduce our colleagues from Italy, Rosanna and Filippo. Today we would like to talk about the ongoing evolution on OECD Pillar 1 and AmountB. Filippo, would you be so kind and introduce yourself?
Sure.
Thank you.
Hello, everyone, and thank you, Henning, for the invitation. I'm Filippo Calatroni, partner of Hager Partners here in Italy, Milan, based, and I'm the head of the transfer pricing team of the firm.
Thank you very much. Rosanna, would you like to introduce yourself as well?
Yes, of course. Thanks for having us. And as for me, very briefly, I work in Filippo's transfer pricing team in Milan. And secondly, I'm a lawyer in Italy.
Thank you very much, Rosanna. On the left side, Levin, it's my colleague here in Germany, but please introduce yourself.
Yes, hello, my name is Levin Flasche. I'm part of the transfer pricing team here in Germany and work as an associate, and I'm happy to be here.
Yeah, as I mentioned before, today our topic is the OECD Pillar 1 AmountB topic. And dear Filippo, which are the origins and scope of the AmountB?
Yeah, so on February 24th, so 2 weeks ago, the OECD issued the consolidated report on AmountB Pillar 1, which introduced a simplified and standardized approach for the application of the arm's length principle to baseline distribution and marketing activities. The aim of the OECD is to reduce tax uncertainty and to limit disputes over transfer pricing, with a particular focus on the needs of low-income jurisdictions about the remuneration of this kind of activities, so the baseline distribution and marketing activities, which are quite recurrent in their countries. The origin of AmountB can be found in the historic agreement among the OECD members on the adoption of the two pillars approach back in 2021. So compared to the other initiatives, including the two pillars, the AmountB has had an approval process without significant obstacles and is now incorporated into the OECD guidelines on transfer pricing as an annex to Chapter 4. So theoretically, the simplified and streamlined approach may be applied for fiscal years commencing on and after January 1st, 2025. However, it is worth noting that jurisdictions can choose to apply it. So it's not mandatory for the OECD members to adopt the AmountB. And as for the other elective approaches, including the OECD guidelines, the fact that a country has chosen to apply the simplified approach should not bind the counterparty's jurisdiction to accept the outcome of the AmountB. So, to summarize, and it's sad to say, but it will be essential for the proper functioning of AmountB that as many developed countries in the OECD area as possible will adopt the AmountB within their legislative framework, or at least will accept the conclusion contained in the AmountB mechanism.
Thank you for the great overview. Moving forward from January 1st, 2025, with this in mind, could you give us a closer look at the specific transactions covered on the AmountB? What type of intergroup transactions are eligible for this mechanism?
So, as mentioned before by Filippo, the transactions which are eligible to be analyzed under the AmountB mechanism are the so-called baseline marketing and distribution activities. Specifically, these transactions, which are referred to as qualified transactions for the purpose of the AmountB application, are of the following two types. First of all, the buy and sell marketing and distribution transactions, where the distributor is a wholesale distributor of tangible goods to unrelated parties. The applicability of the tool is further extended to sales, agency, and commissioner transactions, which is the second type. Here, the agent or commissioner contributes to the wholesale distribution of tangible goods to unrelated parties. In case the tested party to the transaction carries out further types of functions, then an accurate segregation would be necessary to analyze only the qualified ones. Moreover, it is to be specified that, as profusely stated in the consolidated report, the determination of whether a qualifying transaction falls within the scope of the AmountB application should not be driven by the adoption of any specific labels, but mainly by the functions performed, assets used, and risks assumed by the parties involved in the qualifying transaction, and hence the performance of an accurate thorough analysis of the entities involved in the transactions, which is described, needless to say, in the OECD Transfer Pricing Guidelines, does not cease to be essential also for the purpose of the AmountB mechanism.
Now that we understand which transaction qualify, let's discuss how the AmountB solution actually works in practice. Filippo, could you walk us through the key steps involved?
Yeah, sure. And I knew this question was coming, and therefore I will try to be as clear as possible. But I would suggest to those who are watching or listening to the podcast, maybe to open, if possible, the guidance at chapter 5 and to look at the tables included in the chapter, because it could be much more easy for them to follow, let's say, our explanation about how the AmountB works practically. So after having identified a qualified transaction, as explained by Rosanna, the guidance on AmountB foresees the application of both qualitative and quantitative criteria, which represents the second step of the mechanism. So about the qualitative criteria, to fall within the scope of AmountB application, we have 3 different types of qualitative criteria. The first is that the distributor does not own unique and valuable intangible assets. Then the distributor does not assume significant economic risk. And the last one is that the distributor should operate as a buy and sell entity of goods, carrying out low-risk entrepreneurial activities. The distribution of services, commodities, digital goods are excluded from its application. So the conclusion is that the entity should be a limited or very limited risk distributor. Then we move on to the quantitative criteria. We have 2 types of quantitative criteria. The first is that the distributor should incur an annual operating expenses between 3% and 20% of its net revenues. It could be higher, up to 30%, but is optional to the jurisdiction when they will adopt eventually the AmountB. And this ratio, named operating expenses intensity, so OIS, should be calculated on the 3-year weighted average basis. So for example, if you want to do this as exercise for 2025, the 3-year period will be 2022-2024. If a qualified transaction meets this criteria, the next phase consists of a pricing framework whereby a 3-step process determines a return on sales for in-scope distributors, so for the tested parties. So the approach includes, first step, determining the relevant industry grouping. The OECD identified 3 different groups of industries which have been identified by taking into account the relationship between specific industries' products and the profitability attributed to baseline distribution of those products. So to make some examples, Group 1 refers to low-margin industries like household consumables, whereas Group 3 refers to high-margin industries like medical, machinery, and industrial components. The last one is Group 2, that is a sort of residual category that includes all the industries not listed in the previous two groups. And this was the first step of the process. The second step is to determine the relevant factor intensity of the tested party. So if you recall, we have already mentioned the first factor intensity, OIS, so the operating expenses ratio, but we need to calculate also a second factor intensity that is named operating asset intensity, OAS, as is calculated as net operating asset to net revenues. And this ratio represents a direct way for the OECD to evaluate the intensity of the activities performed by the distributor, such as, for instance, the warehousing activity. The third step of this process is to identify the range of the pricing matrix. So using the information of the previous 2 points is now possible, we have the information to identify the range from the pricing matrix proposed by the guidance of AmountB. The matrix includes the margin named return on sales and is based on industry benchmarks. So in this way, the OECD eliminates the need for comparability studies on a case-by-case basis, which represents the core of the simplified and standardized approach of AmountB. So for those who does not have in front of them the tables, to give you an idea of the standardized return on sale included in the pricing matrix, we have a minimum of 1.5% and a maximum of 5.5% of return on sale margin, depending again on the factors mentioned before. The pricing matrix has a range of tolerance of plus minus 0.5%. So it does mean that you may have this kind of tolerance and you do not need to hit exactly the margin and the number listed in the table. So after this three-step process, we have also to perform a cross-check control of operational cost. And this is needed to ensure that the return on sales falls within a reasonable range relative to the distributor's cost structures. And again, I suggest to take a look at the table of the guidance at chapter 5. Finally, a potential final adjustment to the standardized return on sale margin could be due for jurisdictions with limited access to comparability data. And this adjustment is based on the sovereign credit risk. So in very risky countries, this adjustment base may substantially increase the return on sale margin of the distributors located in that specific country.
Yeah, exactly. Thank you, Filippo. And I think it is very, very important to regard the three-step process, as you mentioned, yes. And I think for our multinational enterprises and our audiences, it's very important to understand what you said and that you linked to the table on the OECD Pillar 1 AmountB publication. But now I think it is very important to discuss, Rosanna, does the guidance provide any additional indications for you from your perspective?
Yes. In fact, the final part of the consolidated report provides some guidance on the preparation of appropriate support documentation. And this basically to ensure transparency in the application of the described AmountB mechanism. Hence, it is provided that multinational enterprises should retain, first of all, the proper information about the justifications on which the applicability of AmountB to their transactions is based. Secondly, the proof of compliance with both the pricing matrix and the cross-check control of operational costs. And lastly, the necessary data about the cost structure and the economic conditions of the taxpayer, which are used to collocate the transaction into the pricing matrix or to eventually operate adjustments.
Thank you. I think this was a great overview of how AmountB works, but as with any new framework, there are both benefits and challenges. Would you give us your perspective on what the pros and cons of this mechanism are?
Let me say that we have both pros and cons, of course. Starting from the cons, I would say that the mechanism is not super easy to be followed, since it includes several steps and calculations. And this is the reason why the OECD made available a tool that is in substance an Excel file in December 2024. So just a couple of months before the issuance of the guidance. And this tool is, based on few inputs by the taxpayer, should be able to determine if the intragroup transaction meets the aforementioned criteria, so quantitative and qualitative criteria, and of course, the positioning within the pricing matrix. However, it is important to take into account that the performance of the functional risk analysis is still on the taxpayer. Another cons is related to the number of high-income countries that expressed interest in the implementation of AmountB. So far, only USA issued a notice announcing the intent to introduce AmountB mechanism, allowing the taxpayer to apply the mechanism already from the fiscal year starting on and after January 1st, 2025. Is the only one, because there are very few countries like Netherlands, Denmark, also Germany, committed to respect the outcome determined under the simplified and streamlined approach to in-scope transactions, where such approach is applied by a covered jurisdiction with which they have a bilateral tax treaty in place. So this is a very important condition. Finally, some other countries like Australia and India, they've already shared their opposition, unfortunately, to the implementation of AmountB. And this is due to the fact that historically, these countries contested the low margins recognized by foreign tax authorities for the distribution activities carried out by entities within their countries. So it's likely they expect to have higher margins for their distributors performing these simplified and standard activities. The main pros, of course, is represented by the purpose of simplifying one of the main recurrent and standard transactions within the group. So the intragroup sale of goods to a limited risk distributor, reducing, of course, the risk of double taxation significantly. Unfortunately, as we said before, the current lack of interest from many high-income OECD members in implementing AmountB, or even in simply recognizing its application by the covered jurisdictions, would prevent the instrument from expressing its true potential.
You are totally right, Filippo, and it is very important to see what the other countries, especially USA and the new president there and China will do in the future. Let's wait and see.
Yeah.
But on the other side, we have to regard what the tax inspector and the countries will also challenge. But I think for today, it was very, very important and interesting what you said and what you provided today with the information, Rosanna and Filippo. Thank you very much. And at the end, if you agree, we would suggest to provide your contact data here if our audience and your clients are interested to contact you directly. If you agree, of course.
Of course.
Yeah. Thank you very much. So thank you for listening, and that Levin and Rosanna and you provided a great overview. Thank you for that. And Levin and I are very happy to have the next podcast with you, perhaps with the changes in the Italian transfer pricing legislation 24-25. And if you enjoyed this discussion, please give us a link here. And I would like to thank you and see you later and wish you a nice day. Thank you very much.
Thank you. Thank you.
Bye.
Bye.
Thank you.
Bye.
Bye.